Back from the day's low. It's a 170-point recovery, and Brent crude prices continue to tumble lower. Brent is now at $71.25 per barrel, so that's also positive for Indian macros. Mayuresh Joshi or William O'Neill is with us on the show. Mayuresh, the markets gave a big tumble today. Any stocks which were screaming buys for you in today's fall?
Afternoon, Rima. No, so as far as the market condition is concerned, yes, you're seeing a very, very strong recovery for the markets today. But for a whole host of global markets that we are tracking, the kind of correction that has come through, specifically in the past few days, and the contagion risks that the financial system probably carries with it, carries the risk in terms of more earnings downgrades coming through. So I think 2-3 spaces which stand out in our buy watch list. If the low that we've probably done today, if that holds for the next 2 or 3 days, on the O'Neill lens, we get into a rally attempt. And if we get a strong recovery post that, with the presumption that the Fed probably hikes 25 bips, and the worst in terms of a contagion risk stays behind us over the next few days and weeks, the markets might start showing resilience as we move along. Having said that, I think capital goods stroke infra as a space is where the earnings momentum is expected to remain strong. Government spending has come through expectations in terms of allocation in the budget, abetting order flows, and therefore execution and margins, along with the return ratios expected to improve. So stocks like an ABB close to its pivot levels on the O'Neill lens, stocks like an NCC from the mid-cap space, very, very close to the pivot levels as well. When it comes to cement as a space, again, Rima, I think our entire take is that Q3 over Q4. So I think Q4 earnings can be exceptionally strong for cement companies. Both medium and high growth, the grade coal prices have come off significantly. Freight costs have come down quite substantially for these companies, and therefore the reported EBITDA and reported EBITDA per ton should show signs of significant improvement on a quarter-on-quarter basis. Ultratech within the large caps probably remains on our buy watch. So I think capital goods stroke infra, a few of the bar names, and a few of these cement companies appear on our buy watch list.
Okay, all right. Hi, Mayuresh. HAL. That's been the big outperformer, right? For many, many months, the street was a little bit cautious that there's a government supply overhang that could be there. That hasn't come as yet, but today that's one of the big losers. It's down 5.5% odd. Would you be looking to buy into this dip? Because that's been one of the big outperforming stocks from the defense space.
Afternoon, Nigel. No, absolutely. I think if you look at HAL, if you look at Mazgaon Dock as another example, I think these two stocks are appearing in one of the top 50 stocks as we publish our year-end book as well, which have done phenomenally well in the last financial year. Order books extremely strong. The new orders which will come through, specifically in terms of allocation done under the Atmanirbhar Bharat scheme. A few of the chopper orders expected to come through, helicopter orders, LCA, Tejas aircrafts. Repairs is a big part, Nigel, for HAL's entire portfolio suite, and therefore I think the margins that they are operating out of, the expectations is that with input cost and commodity prices coming off, the margin stability should be seen. So I think for stocks like an HAL or a Mazgaon Dock, they're obviously at late stage basis on the O'Neill lens. We would ideally want them to correct more, probably make a reasonable amount of a stage base as they correct. Because as they correct, I think valuations will become a little bit more reasonable. At the same time, I think it will give an appropriate entry point as we look at on our O'Neill lens in terms of the relative strength of both these stocks.
Okay, got that. Okay, the market's continuing its march towards that 17,000 handle, and let's see if it can get there. Mayuresh, the one island of green in this market obviously has been, maybe not today, but I mean over the last couple of weeks, it's been the capital goods area, right? Capital goods, defense. That's where the orders are coming in. That's where, it's completely domestic facing, so unfazed by what happens in the world. Do you have any stock picks here?
Absolutely. As I just mentioned in my opening remarks, Surabhi, 2-3 stocks look extremely attractive from a buy watch list perspective. You look at the kind of orders that ABB has won over the last few quarters, a mega order of almost in excess of 25,000 crores to be delivered over the next few years. Input costs coming down significantly. What they've probably done in terms of their margin profile with better execution has been clear operating leverage playing onto their balance sheets. And therefore, a combination of a strong order flow coming through, giving good revenue visibility, good execution, ensuring margin stability and margin expansion going forward with input costs going down, ensures the bottom line growth probably persists as we move into the next few quarters as well. Next year, around the same time, so I think we'll be talking about the general elections. So I think a large consensus of the market opinion is that a lot of order tendering will happen over the next 2 to 3 quarters for a whole host of these players. Siemens, ABB, L&T, as I said, NCC within the mid-cap space. I think all of them look very, very interesting from a O'Neill lens and very, very close to their pivot points as well. So yeah, these definitely can be careful.
Do stay on, Mayuresh. Need to slip into a very short break. We'll come back and chat more about the markets and get closer to the market closing as well.